Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, May the 1st, Monday. We start a new month with a lot of information ahead of this week for economic data and also some decent news, but I think we are uncovering some issues again on the banking sector. But first, economic data, S&P Global Manufacturing PMI, above 50 coming from 49. This is good for avoiding recession. ISM manufacturing PMI for April, higher than expected, 46.8. We got 47.1, still below 50. Employment higher. Manufacturing prices higher. Be careful with this one. I think this is not good for the market, that prices are going higher for the manufacturing, and new orders going higher is still decent for avoiding recession. Construction spending month over month came in positive. So more spending on the construction side. At least that's good for that sector. I don't think it has a big impact, but let's focus on the manufacturing PMI, that it's higher than expected, and everything else for the ISM is above 50. More news. JPMorgan is taking over First Republic after biggest US banks failures since 2008. First Republic Bank got crashed, got demolished, as you may know, and FDIC were looking for one bidder, and they contacted JPMorgan and they make a deal. The deal is basically the deal is 10 billion to the FDIC, and I think it's just JPMorgan is getting 92 billion in deposits, which includes 30 billion in large banks, in other large banks put into Republic. So the bank is taking $173 billion in loans and 30 billion securities as well from the Fed. But just as for the payment, they were making a payment of 10 billion. But avoiding this technical stuff, the money arrangements, the thing is that another bank got rescued, not by the government only, but also by other banks acquiring. So this is a big issue, despite the fact that Secretary Yellen is saying that the bank sector is resilient, that everything is good, everything is fine. I don't think we are fine. International Management Fund Managing Director Georgieva has said that there may be additional vulnerabilities in the banking sector. And this is another sign of that. So it is not only about avoiding recession, but avoiding 2008 banking crisis. Be careful with this sentiment, because this really destroyed the market today. Not destroyed by a lot, but it created a lot of choppy action. As you can see, this is the Nasdaq. We started chopping around like crazy. You can see we open and we started going up, down, up, down, up, down. With this support of the pre-market low, we were doing lower highs until we kind of break up. I took this nice long for around 16 points, nice risk reward ratio until settlement, a big 13,320 level on the Nasdaq futures, but we failed at going higher than 13,336 that was last week high. So we are putting pressure at these levels, but we are rejecting this pivot. We are rejecting, for now, this breakout. Still looking good for the upside, but this kind of signs, I mean, this was really where the shorts start piling in. And after this, I just call it quits, and I don't want to trade this market anymore today. I will just wait for tomorrow and other days to find better opportunities, because for me right now, this is not a market I would like to trade. More things that are also choppy and bearish. Gold it started to look nice, but then we dumped after these numbers, after the open. Copper was looking nice also, but then we dumped. Still in the green, but copper, remember, Dr. Copper, you have to follow these markets to really have a lead indicator about the economy overall. Copper shows if it's strength or if there's sickness in the economy. Right now, we are more or less holding these levels of 3.8, but look at this dropping tail, more and more looking bearish to the downside. Gold also on the daily, it's range bound. As long as we hold 2000, I think we are going to be in this range bound activity. But if we break this level of 1980 or something like that, we have a lot of potential to the downside until the golden pocket at Fibonacci 6018. So be careful with that because gold loves low interest rates. If this goes down, I think we are going to see also markets going down. Something curious also is the Russell 2000. Look at this bottoming tail. We have this ascending triangle into 180, and we've been seeing quite a nice pushish the last couple of days on the small caps. But today, everything was looking fine. We pushed, but then we rag pulled. And all the markets are showing this kind of bearish activity at the streams because I don't think today's news and this FRC acquisition by JPMorgan is looking bullish. So there's a lot of concerns in the market regarding banking, and you can see that a lot of banks, except for JPMorgan, that is up 2.66% on the acquisition, and Wells Fargo also benefiting from some deposits, are in the green. The rest, all the regional ETF, regional banks ETF, KRE 2.06% in the red. FRC, it's halted due to this regulatory action by the FDIC and the acquisition, minus 43%, 1.90 price, 1.90. Charles Schwab in the red, MTV in the red, Bank of America in the red. Goldman Sachs slightly in the green, but also looking like descending price action. Morgan Stanley in the red, minus 1.40%, and Credit Suisse, a lot of eyes because this might be next one, minus 2%. Another good thing that you have to pay attention also is the sector funds. You can see finances are barely in the green, but energy is having a big impact on the inflation. It's just continue lower and putting lower lows and lower highs. And this is affecting XLE overall, minus 1%. And look at this. Which sectors are in the green? Defensive sectors. XLU, utilities in the green. XLP, staples, breaking out this pivot that we have since in like 1 year ago. And healthcare XLV. The ratio between XLY, consumer discretionary, and XLP is minus 1%. And look at the trend. The trend is going towards staples, not going towards discretionary. That would mean that the overall market is expected to go up into growth or into risk on, but we are not seeing that. Russell is being rejected after this big pullback. Bitcoin is being rejected also, trying to hold this 26,000, but looking quite weak today. And gold and copper are also weak. After this big push, they are pulling back a lot. Gold is in the red. And I think overall, Tesla and Amazon also big in the red. Look at this Tesla. Tesla was having a nice try of recovery, but they just broke the channel and they are just going down. So Amazon is also minus 2% in the red, trying to break this nice descending channel to the upside, but point of control is low here, but Apple is trying. Actually, Apple is pushing, but overall, we are almost flat. I don't think anyone is going to position themselves too risky ahead of Wednesday FOMC or Apple's earnings on Thursday after market close. So you just have to be patient. Look at this price action. Personally, I don't want to trade this kind of price action. So I just took a couple of scalps and that's all for now. And I think that's all. We did a quick review of the main markets, and defensive sectors are going up. You just have to take that into account. And I think that's all. Ahead of FOMC, tomorrow we have, let's take a look of this week's economic data. So as I was saying, tomorrow we have JOLTS openings and factory orders. And on Wednesday, we have ISM services, employment, and all data. And also at 2 p.m. interest rate decision, FOMC. Big day. We are expecting to see 25 basis points with almost 90% of probability. And on Thursday, we have jobless claims. After market close, we have Apple's earnings. Also Shopify, Coinbase, and all. AMD tomorrow, and Nvidia. It also, where's Nvidia? What was that? Nvidia is tomorrow also, but I don't see it. Qualcomm on Wednesday. Well, anyway, so that's on Friday, non-farm payrolls and unemployment rate. So big week on economic data. Just be patient. There will be opportunity. Just wait and react to your levels on technical analysis based on fundamentals. Always try to have your own technical analysis, your own bias, supported by fundamentals, and just be patient and trust yourself. That's my main recommendation. So let's go back to the charts and let's see if we can push a little bit more. So Russell is trying to curl. That's below point of control. I don't see this being super high. Nasdaq is just rotating again, just going in a big volatile range. It's minus 0.13, so basically no move. And settlement is just right here. S&P's futures is just 0.15 in the green. You barely moved, just chopping around. It's just, there's no way we can just chart anything today. It's better to just stay cash and wait for other days for better opportunity. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Thank you for the support. Thank you for the subscribers. And let's keep growing this channel. I will for sure be here providing my understanding of fundamentals, technical analysis, and also other markets that might be interesting for your trades. So thank you for your time. Remember that the trading day is not over yet. We just starting lunch hour, 12 noon to 1 p.m. And after that into the power hour, I don't expect big moves either side, not long, not short. So just be ready for, if you want to trade these markets, be ready to be chopped around. Just manage your risk in that way and you will be fine. If not, my recommendation is just to take the day and wait for tomorrow and Wednesday. There will be plenty of opportunities. Discipline and risk management are key for success. Remember, stay safe everyone and see you tomorrow.